I'm joined by Nick Gartside, International CIO of Fixed Income at JPMorgan Asset Management. Nick, thank you so much for joining us. Eurobond, well, for the first time, at least Germany wasn't completely against it when they met earlier in the week, and they said, well, Eurobonds, yes, maybe, but at a later date. Is it now inevitable that we need the Eurobonds to reassure investors and just to finish with the debt crisis?
Well, I think so, certainly, yes. I mean, I think that Eurobonds are the solution to the crisis in Europe. And I think what's interesting, though, is the journey to get there. And that journey is likely to be a very bumpy journey. And I suspect by the end of this year, we'll see a lot more on that. Because one thing that will come to a head is the EFSF.
Yeah.
Remember that package agreed by heads of government on July 21st? Well, that's just a package, a proposal right now. That needs to be ratified by 17 national parliaments. That could well be challenging. Even if it is ratified, I think that the size of the EFSF at the moment isn't large enough.
Nick, you believe that it's going to be a bumpy ride. Is it going to be a very long ride? Because President Sarkozy was very clear. He wants integration first, Eurobonds second. But does it mean that we're going to see other countries default, other countries such as Italy, Spain, needing a bailout?
Well, I think that one of the messages so far in Europe is that the market's moving ahead of politicians. And politicians and central bankers have been behind the market and are scrambling a little to catch up. So I think to an extent the timescale is dictated by markets, because remember, the issue with places like Italy, places like Spain, is not that they're insolvent. That's clear they're not. They are very solvent, very healthy countries, but they need access to market liquidity. And that's the key going forward.
And that's, of course, the main problem. Does the ECB have a real role to play? I mean, it didn't really want to continue buying bonds. It's now forced to. But are we blurring the lines between central banks and government officials to a point where actually it becomes very uncomfortable?
I suspect for central bankers it's already a very, very uncomfortable position now. And again, the message from central bankers has been very clear that the central issue in the world today is debt. There's simply too much debt across much of the developed world. And that's something that politicians have got to deal with. Central bankers can't. All central bankers can do is ease that journey, that deleveraging journey that we're going on right now.
So, Nick, concretely, are a lot of the yields on the peripheral countries, Italy, Spain, both today actually at 4.98, are they going to go up, or would they represent a buying opportunity for certain investors?
Well, I think in the short run, the ECB is doing a very good job at keeping those yields at 5%. The challenge will come, though, I think, as we get into September, into October, and it will come with the EFSF and whether that's ratified. Because the ECB have been clear. They're doing a very short-term gap here, and they're expecting that bailout fund to take over. I'm not sure at the moment that that ratification will go ahead as smoothly as some people think.
And what do you make of the level of Treasuries? Because we've had a downgrade. They're at the lowest they've ever been. It seems pretty incredible, and it's a similar situation here in the UK, where of course, we haven't had a downgrade, but it's considered a haven, where you look around and you say, really?
I think they are a haven, and I think that the central message, the central roadmap for markets now is Japan. Japan may be 10 or 15 years ahead of Western economies, but the central issue is the same: too much debt. When you've got too much debt in an economy, it really does crimp demand. Consumers can't spend, they're indebted. Governments can't spend, they're doing precisely the opposite. So central banks keep rates on hold for a very long time, and I think that the direction of yields in the long run will be lower, not higher.
Both for the UK and the US?
Very much so. And I think the message from Japan is don't fight that.
And so what would you be buying right now, the short end or the longer end of the curve?
Well, in our portfolios, we have exposure to 10-year US Treasuries. We've got exposure to 10-year UK gilts. And actually, one of our favourite places is Australia.
All right.
10-year Australian yields, 4.25%. They look pretty good to us.
Thank you so much, Nick Gartside there. Now